Hello and welcome. You're tuned into CNBC TV18 Prime. Let's get cracking on a brand new edition of The Big C. I'm Manisha Gupta, and with me is Nigel Dsouza, back with your daily dose of commodities, cryptos and currencies. But what are we focusing on today, Nigel?
Well, we've got plenty lined up for our viewers in today's trading session, and we'll continue our focus on global growth. Amid the ongoing trade tensions, we'll have Trinh Nguyen of Natixis, who will be joining in to take that discussion forward. We also can't take our eyes off the rally that we're seeing in the Bitcoin, which has topped $119,000. Is there more to come to that rally? And what are the triggers? We'll talk all things cryptos with Ashish Singhal of CoinSwitch. Well, before we get to those chats, let's tell you what's going on in the global equity markets at this point of time. Last week, the major averages on Wall Street, well, they snapped their multi-week highs. The S&P 500 dipped close to around 0.3%, its first negative week in 3. The Dow fell 1%, breaking the 3-week winning streak, while the Nasdaq Composite ended more or less flattish with a bit of a negative bias, snapping the 3-week winning streak. Stock futures, too, are taking it on the chin as we speak. You have Dow futures that have slipped close to 300 points. The move follows Trump's 30% tariff on Mexico and European Union. In other important cues to track, the inflation reading this week, that will be top of mind, will give investors a better sense of how Trump's tariffs are already affecting the economy. And also we'll have earnings season that will kickstart in the US market with a lot of big earnings that are lined up. Meanwhile, we're seeing mixed cues coming from the Asian markets. Nikkei has closed by lower by close to around 0.2%, while on the flip side, the Shanghai clears with a bit of gains of around 0.3%. Coming back home, concerns on Trump's tariffs and weakness in IT-related names, that's what's denting sentiment. The Nifty is down close to around 100 points, though it's holding above that 25,000 odd mark. A little bit of choppy trade today.
But let's take a look at the crude oil prices, because that's clinching onto its gains following that 2% rise that we saw on Friday in the previous week. Remember, prices were up 1.6% in the last week, notching their second weekly gains. Prices, however, have still being a negative in this year, down by 5%. The price moves have been largely capped by concerns around tight supplies continuing to plague the markets. Well, amidst all of this, there is expectation that the U.S. could also put additional sanctions on Russia. While that is a story unfolding in the crude oil prices, the U.S. dollar index is trading steady around 97 levels, but the overall reaction is muted in the currencies, with the euro and the Mexican peso declining. The dollar index is down nearly 10% so far in this year on worries that data could soon reflect more widely the damage the U.S. policies have had on the world's largest economy.
Well, as promised, let's take the discussion forward then with Trinh Nguyen, the senior economist who joins in on the show. Hi, Trinh. Thanks a lot for joining in. What do you make of Trump's latest hit that, he's talking about putting tariffs on the European Union, on Brazil as well? On a global parameter, earlier, the expectations were that maybe, in fact, tariffs will settle in that vicinity of 15-20%. Now it appears he's talking about 30% and north of that. How are you reading the situation?
Well, first, I think it's very clear that tariffs are going up, and you're rightly to say that they're going up much more than before. I think this is a very similar tactic that Trump has used before, which is to escalate the situation quite aggressively so that he can get concessions for deals. And he's very impatient, right? Because we only have 2 deals so far, and even the Vietnam one is pretty murky. We have the UK deal, and then the Vietnam deal only announced by the president himself. And for the Vietnamese side, they're still working out how they can even lower from the level they got, which is 20 to 40%. In other words, it's July going towards the August deadline of reciprocal tariffs. And I think he is looking for quick wins. And one way to do that is to try to exact concessions via threats. Is it going to work? Well, I think it's going to be very difficult. But at the same time, if he's willing to settle from that 30% level, the teens is going to look pretty good. Let's remember that for the EU, it had aimed for 0 tariff with the US before. And like you said, from this 30% level going down to the 10% level with the sectoral tariffs is going to come out as a win for the EU, of course.
Trinh, we do understand that almost 23 countries have gotten letters by now. 17 have it perhaps lower than what they saw in the month of April, but not everybody. And there are still more letters and more conversations going into the market there. We're done with half of July right now. 1st August is the deadline right now. Do you see it extending? Do you see that much of the work will be done by then? We'll see those trade deals sealed and signed, or is it going to be taking a longer time?
It's probably going to be extended all the way to the China deadline, so maybe a week or two later. So at the same time, I do think that he's going to keep the pressure in order to get countries to accept a higher level. Let's not forget that for him, before he came into office, the 10% was the worst case scenario. And now everyone's kind of eating the 10% fine, in that they actually now think the UK deal is the best case scenario. And I think for many countries, let's not focus too much on the reciprocal tariffs. I think Vietnam's case is very extreme because export to the US is almost 30% of GDP. But for India's case, it's only 2.3% of GDP to the US, right? But I think for a lot of countries, what is very worrying is really the sectoral tariffs, right? If you look at Japan or South Korea, for example, the overall exposure to the US market as a share of GDP is even lower than India's, in the 1%-ish level for Japan. But auto is a big deal, right? So what they care about is not just the reciprocal tariff level that Trump threatens, which is 25%, is how they get lower from the 25% of auto, right? As well as the reciprocal tariffs, as well as upcoming threats. So I do think for India, a deal is needed, not just the fact that Trump is going to backtrack on the threats, but more than I think sectoral tariffs are much have a deeper foundation in nature. And the one way to look at it is look at steel, for example. When we look at the fact that we now have 50% tariffs on steel, it would sound absolutely incredible and unbelievable. But here we are. And sectoral tariffs, which is Section 233, is a bigger threat because they're deeper in foundation and they tend to last.
All right. But Trinh, what about sectors like pharma? As you said, various sectors have some exemption, and pharma is one sector out there. He's been talking about it, but do you think he'll go the whole hog, or will he use it just as a negotiating tactic ultimately?
I think ultimately it's a little bit of both. He understands that pharma is a big industry in the US and affects everyone, particularly the vote bank. So it's not in his interest to basically make healthcare, which is already very expensive in the US, to be much more expensive. But he also sees that it's a huge strategic sector, particularly if you look at where the EU is. A lot of it's booked via island, and a lot of costs are borne in the US. And pharma, I think, will come. And based on his comments, it basically means that the timeline is going to be lengthened over time. And it's unlikely to be in the 200% level, but irrespective is a sector that he'll look at. It won't be the first sector he will focus on, in my opinion, just because it has the negative consequence of it will be much larger than the other ones that he has done so far. Such as steel, such as auto parts, and so on and so forth, that's coming. In that, a lot of these are intermediate goods that affect the producers much more. And it's up to them, the importers and the producers themselves, to absorb the tariffs. Whereas in pharmaceutical, I think it's going to be much more consequential for the consumer. So yes, they're coming, but they're not going to come right away as he threatens. And I think for him, everyone can see that this is one issue where it's I wouldn't say it's a bluff, but it's going to be something that takes a bit more time and how it's going to be absorbed and implemented. But still, I think it's an important sector if India were to negotiate to focus on. And the UK deal shows that you can get wins on the sectoral level. And that is a key for a lot of the countries that are very affected by a lot of the sectoral tariffs being targeted, as well as the reciprocal tariffs themselves.
Oh, well, absolutely. We can't hear enough about that UK deal, can we, Trinh? But, the first half was all about tariffs and then geopolitics and the kind of decline that we saw in the dollar index. Safe haven buying was in plenty. How are you looking at second half of this year? Because for the time being, we seem to have started second half exactly where we left the first half of this year. Is this how we are prepared for the rest of this year?
I think the key one to watch is China. I think a lot of China data came out. On the supply side, it looks really good. GDP is probably going to exceed 5%. But on the demand side, it's terrible. What that means is the question is whether or not the PBOC is going to let that yuan depreciate significantly versus the dollar. And the answer is no. It has appreciated against the dollar, but it's not going to be significant, which means countries that have done really well in terms of this dollar downtrend, such as the EU in particular at the top. And then you have the Japanese yen, which appreciated, but a lot of it has been retraced. is that can they absorb a lot of this deflation in China by having such an expensive currency? At the same time, we have the US, which is a huge demand of goods, putting more friction to trade. We don't know the extent to which Trump will pull the trigger on tariffs, but we know for sure there's 10%. And that in itself is a huge hit on margins. And another hit is going to be a very strong euro, a very appreciated currencies. And that's why I think one of the reasons why the Reserve Bank of India has kept the rupee pretty weak, right? Versus the dollar. And a lot of the Asian traders have been hit, such as Vietnam. So I do think there is a limit to the dollar weakness story, particularly on the short term. Even if you do think that the dollar trade is really crowded and that rate cuts and so on and so forth will push the dollar lower in the short term, the question is, can you take the strong currency? And for Europe, there is a limit to that euro strength, particularly now it's looking increasingly lonely and particularly in juxtaposition to the Chinese yuan, which is unwilling to take the strength forward. And when the yuan is not appreciating, everyone else is looking at China exporting its deflation, exporting this very strong growth in supply, but not demand to the rest of the world. India is an example where the trade deficit is something that's very worrying, right?
All right. Trinh, I wanted your view on the dollar index. That's the one that went dancing away to 110. It's cooled off to around 97. But it doesn't seem to be getting its bullish trajectory back. What is your view? Do you think the dollar can go ahead and maybe pull back to the early 90s? Or do you think around that 100-odd mark is where it'll find its feet?
First, there's a lot of debate on the Fed. Inflation's coming out this week. Inflation is probably going to rise on a month-on-month and also on a year-on-year basis, both for headline and core. But even if inflation is rising and Trump tariff threats are there, we think that between the uncertainty of inflation, tariff, and output is going to be the winning factor, and the Fed is going to cut. And when the Fed cuts, it may be starting with 50 basis points this year, but in 2026, that cut cycle is going to be deeper. Now, what that means is that we're looking at the dollar softening, right? Because we have lower rates for the dollar, and real yield of the dollar is also becoming increasingly not so attractive as rates also rise, inflation also rise. So as a result, we do see the dollar strength weakening over time. The question is not so much that we expect dollar weakness. It's so much that in the short term, given the uncertainty where we are and with the yuan where it is, I don't think that a lot of central banks are going to allow that to happen. And the clear move next is going to be when Jerome Powell finally is going to cut those rates in the US.
Well, absolutely. There's just so much to watch out for in the second half of this year as well. And a lot of that will, of course, impact the economy, the currencies and the interest rates going forward as well. Trinh, pleasure talking to you. Thank you for your observations across all of those markets and look forward to speaking to you yet again. But for now, it's time for a short breather on the show. On the other side, we talk all things crypto with Ashish Singhal of CoinSwitch. Stay tuned. Welcome back. Let's get chatting with Ashish Singhal. He is co-founder at CoinSwitch and joins us on a day when the cryptocurrencies have made, or rather Bitcoin is making yet another all-time high. Ashish, 110% of gains in the last 12 months now. We're standing at 122 and counting. Every tick is still on the higher side. If you look at the overall crypto market cap, almost $3.9 trillion. How would you, first of all, summarize the kind of year this has been for blockchain, for crypto as an industry?
I think this has been this has been a phenomenal year for crypto. I think it was a long time coming. Since the ETF was approved, I think almost 2 years ago now, the momentum was on the crypto side. After the ETFs, institutions have opened up their floodgates of investment into the crypto industry. After the US election, a lot of positive regulation kind of helped institutions gain that trust in this as an asset class, and that is the reason that you're seeing all the gains coming up. Obviously, Bitcoin halving and everything coming together this year has been tailwinds helping crypto industry grow to where it is today.
Hi, Ashish. Good to see you in on the show. Thanks a lot for joining in. What about the drivers? One says that maybe, in fact, corporates will start participating to a larger extent. Are you seeing signs of that? And what are your expectations with regard to participation on that front?
No, absolutely. So what we are seeing now is a lot of corporate treasuries are moving, maybe a small amount, but definitely are trying to move into crypto as an investment as well. We have seen MicroStrategy obviously playing out a larger role into making crypto itself as their base of the entire company and trying to gain out of the moment, out of the ups and downs of Bitcoin, and making sure that their entire strategy of investment remains on crypto. We are now seeing many more companies, even including some in India, are putting Bitcoin on their treasury. With the institution like BlackRock, Fidelity, already proven that a large amount of HNI are interested in getting crypto as an asset class. These companies are not far behind, and we will see time and again as the regulations become more progressive, as the regulation allows these companies to get into crypto, have easier reporting guidelines, have easier taxation guidelines. We will see many different companies considering a diversification between gold and maybe Bitcoin as an asset.
Ashish, we keep talking about Bitcoin in dollar terms. I was looking at calculating it in the Indian terms today, and for one Bitcoin is a crore plus now
Yes.
in India. I mean, with the kind of price run-up that we have seen, I think it's become a tokenized or a very fractionalized market right now, would you say?
Uh,
It
Definitely,
always
crypto.
was like that.
It always was like that, right? And that's the beauty of it, that even though the price of Bitcoin is almost 1.07 crore in India today,
Okay.
people can still get in with just 50 rupees, 100 rupees, and get into this asset class, right? So this has been a truly tokenized market for the from the very start, and we believe that's where crypto would help as well. Even tokenizing, you have seen what Robinhood has done for the US stocks, tokenizing them as well. We could see many other asset classes getting onto blockchain for tokenization and getting the benefit of it, even though the underlying asset could be worth crores and crores of rupees, but it doesn't take a lot of amount to get into these asset classes. With just $100, $200, every retail user can get access to it, right? So we will see a lot of tokenization across asset classes, similar to how crypto works, hopefully in the future, so that many people have easier access to many different asset classes with the underlying use of the blockchain.
Ashish, I've known you for a very long time and you've been a pro at a lot of things. I just wanted to get an understanding of how many cryptocurrencies really are out there right now and how many would you say are the most active in sense of numbers?
So if you would ask me maybe 4 years ago, I would have said somewhere between 10 to 20,000. But these days, with companies like Pump.Fun, 20, 30,000 cryptos are launched every single day, right?
Wow.
But are they, all legitimate? Probably not, right? So you would find probably top 1,000, top 2,000 currencies are really making a mark in the ecosystem, and really what driving a lot of this momentum forward. But albeit, a lot of smaller cryptos are getting launched every single day, trying to solve a new use case. Think of it like a startup, right? In the probably S&P 500, there are top 500 companies which you probably know about, but there are thousands and thousands of startups trying to make their mark, right? Think of those smaller cryptos getting launched every single day. And with the momentum on our side, crypto development has been very, very active. A lot of developers are now trying to bring new use cases onto blockchain. Many traditional companies are getting into blockchain, trying to launch their own tokens, trying to create more value out of the blockchain and crypto ecosystem. So while there are top 5 cryptos which are very, very widely used, probably 80% of the market cap, then next probably 1,000 which has about 19% of the market cap, and then 1% which are trying to be the next Bitcoin, trying to innovate and trying to get into that top 500 or top 1,000. And there are many, many of those. There are lakhs of those cryptos out there.
Which one are you most bullish on, Ashish?
Bitcoin. So from the day one, I've always diversified. So first it was Bitcoin, and then I diversified into Ethereum. So I
Ethereum.
always follow the 80-20 rule. 80% of my wealth goes to Bitcoin and 20% goes into Ethereum. I've now tried to diversify as well into many other assets, but probably very small amount, maybe a 1% of my portfolio into smaller cryptos, which I believe in, which I feel could be the next game changers in the next 5 to 10 years to come, right? So very small amount there, but mostly lies in Bitcoin and Ethereum.
Ashish, when did you start investing in cryptocurrencies?
I started, I think, in 2014 end or early 2015
I'm just
is.
making those calculations in my head now, Ashish, on what levels you bought and where you stand right now.
So I'm good, right? So I think a lot of people regret not buying enough. I feel that I've enough. That's never been the aim to gather as much wealth as possible. I think what get me excited is how do I make this asset class accessible to every single Indian? And I think with CoinSwitch we have done a great job. But hopefully we'll continue to do better and better and make sure that this asset class, the knowledge of this asset class as well as the availability of this asset class goes across India. The policies are very well put out so that it's not about just investment, it's also about development. India could tomorrow have Amazon's, Google, Microsoft coming out and could be built on blockchain, and that's what I advocate on, and that's where all of my energy goes.
Interesting, Ashish. You didn't buy enough. I didn't buy at all. So, missed out on that one. But Ashish, people say that President Trump may or may not be good for the global economy or global equity markets, and definitely not good for Powell. But one thing that people believe is in this tenure, cryptocurrency is going to see much higher levels. If you had to give a guesstimate, by the time he's done with this term, where do you see the Bitcoin headed? Last week I heard about 300,000 odd.
So I think I really don't speculate in the short-term aspects of it.
No,
And
4 years.
honest, 4 years is still short-term in the
Okay.
Bitcoin lifetime that we live in, right? We believe probably, in the years to come, if Bitcoin proves to be what it is, proving day in, day out, could be, very, very high value. But in the next 4 years, I think what US has done is put this in the global limelight by bringing a lot of clear regulations for companies, right? And that is why you're seeing that rise. I believe that this will continue to go on. The price may fluctuate because it also, the global tensions also impact the price. And no matter what you say, it is an asset class, but it's a riskier asset class. And we have seen in stressful times how risky asset class behaves, right? So with global tensions being, trade wars or be it actual wars between, say, Israel, Iran, or Ukraine, Russia. So I would still say that a milestone for crypto is much higher, but you could, as an investor, face volatility in the meantime to get there. So if you are on a longer horizon, if you can invest for that longer horizon, crypto could be a good asset class. But if you're looking for short-term gain, please do your research well within, and don't invest more than 5% of your portfolio into crypto, because no matter what it is definitely a riskier and a newer asset class.
It sure is, and the volatility is something that it has made headlines with. As we wind down this conversation, Ashish, one final question, and we've seen various countries come out with friendly legislations and policies towards crypto and blockchain and Web3. We've seen that happen with the US now. That seems to be taking a lead. India was supposed to come out with a paper. 30th June is the deadline that came and went. There's no other deadline. We're not hearing enough now. How are you looking at India as we get into this whole new era where the future of money clearly seems to be in cryptos?
So definitely, I see that India playing a big part. 12% of global Web3 developers are now based in India, right? And with India not having enough regulations to promote these people, a lot of these Indians are going outside to the countries like Dubai, Singapore, and forming these companies, which could ultimately become very, very big in the future. And India might miss out on these companies being domiciled in India, right? So I definitely see a clear regulation is the need of the hour. The longer we delay, the more likely we're going to lose this race. We are expecting the paper, hopefully, maybe, obviously the June timeline was missed, but probably have that out in July. And we are hopeful that India would take a larger stance into regulating crypto. I think today what exists in India is a bit of a fear as well, right? What would government do? And nobody wants to put their fate into that fear. And that is why you see a lot of development done by Indians, but done outside India, right? And I want that fear to go away. Maybe the regulation will take 1 year to 2 years from here we are where we are, but at least having a clear path toward that regulation would avoid that kind of uncertainty in the mind of a lot of developers, a lot of companies who want to set up in India, build in India, right? So I think that is the need of the hour. Clarity, having clarity and right taxation would be the first step in that right direction.
And we only can hope that India does it sooner than later, as you said, because we're losing that very, very strong, complete brain drain, as you said. 12% of global developers are in India at this point in time and only moving out. Well, thank you so much, Ashish, for your time and your observations as well. Great talking to you, and we hope we do that very soon enough. But with that, that's all the time that we have on this episode of Big C. Thank you for watching from me, Nigel, and the entire team that put that show together.